Okay, let's get into this. We're looking at Lululemon today, and there's this real paradox happening. On one hand, you've got the stock price, which has really taken a beating. It's down, what, 54% from its all-time high?
Yeah, a significant drop.
Right. And its price-to-earnings ratio, the PE, it's sitting around 16. Now, that's close to its lowest point in like a decade.
Yeah.
Way lower than the market average.
Definitely out of favor based on that metric.
Exactly. And you hear all this talk, consumers maybe pulling back on athleisure, worries about new tariffs hitting imports.
Right, the headwinds narrative.
But then, and this is where it gets really interesting, the company itself, it's actually hitting new highs.
Yeah.
Record revenue, record earnings.
Yeah.
So how can both things be true at the same time? That's what we want to unpack in this deep dive. Figure out what the numbers are really telling us.
Exactly. And I think this is a great chance for us to, look past the sort of immediate noise, the investor anxiety that seems to be driving things. We can pull together the information we have and try to figure out, is the stock price reflecting like a real fundamental weakness? Or is it maybe an opportunity the market's overlooking?
Okay.
We need to focus on the core business, what they're actually doing strategically and what that means for the future, especially with the stock looking, well, cheap by historical standards.
All right, so let's tackle that contradiction head on. The falling stock versus the soaring business. I mean, Lululemon's revenue, it's gone from under $3 billion maybe 10 years ago
Global growth path
to almost $11 billion in the last year. Plus, they've expanded way beyond just, women's yoga pants in North America.
Yeah.
To menswear, huge international push.
Absolutely.
So with that kind of track record, that undeniable growth, where's this investor concern actually coming from? What's the worry?
Well, a big piece of it, as you touched on, is this idea of increased competition. You've got these newer, trendy brands like Alo Yoga, Vuori, Athleta.
Right, you see them everywhere now.
Yeah, and they're fueled by social media, venture capital money. They've really jumped into the athleisure space. Even Nike's making moves trying to grab some of that market share.
Okay.
So that creates this really strong story, this narrative that maybe Lululemon is losing its edge, losing its dominance. But, and this is key, if you actually connect that narrative to the bigger picture, the underlying numbers tell a kind of different story.
How so?
Well, look at North America. Lululemon's revenue there grew 4% year over year, and that's on a constant currency basis, so it's stripping out the currency fluctuation.
Okay, 4% growth.
Right. In that same period, Nike saw a 7% fall in North America apparel, and Athleta saw a 6% fall.
Oh, wow. So Lululemon is actually outperforming them.
It certainly looks like it. It suggests they're actually doing a pretty decent job fighting off these competitors, even when overall apparel spending in North America is, a bit tough.
That really highlights that gap between the story and the data.
Yeah.
So, okay, if competition maybe isn't the killer people think, what about those tariffs you mentioned earlier? Are they a major drag on profits?
Yeah, good question. Tariffs are definitely something Lululemon has to deal with, like any importer, but the company itself, they're only expecting a pretty small impact on their profit margins from the current situation.
Small impact.
Yeah, unless those tariff rates really skyrocket, the hit shouldn't be massive. And you have to remember, Lululemon has this incredibly strong operating margin, around 23%.
23%. That's high for apparel, isn't it?
It's very healthy. It means for every dollar of sales, they're keeping 23 cents as profit before interest and taxes. That gives them a significant cushion, a shock absorber to handle things like slightly higher import costs.
Okay.
So again, it feels like maybe the narrative about the threat of tariffs is maybe outweighing the actual expected numerical impact right now.
That makes sense. Okay, so if competition and tariffs aren't necessarily the big bad wolves the market thinks, let's talk growth. Where's it coming from? You mentioned international.
Oh, yes.
Yeah.
International. This is, I think, where things get really interesting.
Oh,
particularly China. The growth there has been, frankly, phenomenal.
Even with all the news about China's consumer spending slowing down after that property market trouble in 2021.
Exactly. Despite those headwinds, which are very real, Lululemon's revenue in mainland China was up 22% year over year last quarter. Again, constant currency.
22%. That's huge.
It is. China's now bringing in about $1.6 billion a year for them. And honestly, they are just scratching the surface. Think about it, a market with over 1 billion people.
Yeah, the potential is massive.
So it raises this really important question, right? What happens if or when consumer spending starts to pick up again in China? That could seriously accelerate Lululemon's growth, couldn't it? It could easily offset any potential softness or saturation they might eventually see in North America.
So China's the big engine. What about other places?
Yeah, they're also seeing pretty rapid growth in other parts of Asia and in Europe, too. Together, those regions already account for about 1.1 billion in annual sales.
Okay.
So there's plenty runway there as well. If North America does slow down, they have these other significant geographic levers to pull. This international story, I think, is the real growth driver investors should be watching closely. It paints a much brighter picture.
Okay, so you've got strong underlying performance, especially internationally, good margins, handling competition. But the stock price is still low. What's management doing about that? Are they just letting it sit there?
No, not at all. They seem to see the disconnect, too. And to take advantage of that lower stock price, they're getting really aggressive with share repurchases.
Buying back their own stock.
Exactly. They spent over $430 million buying back shares just in the last quarter.
Wow, $430 million. How much is that relative to the company size?
That's roughly 1.5% of the company's entire market value bought back in just 3 months.
Okay, that's significant.
It is. And when a company does that, it reduces the total number of shares out there. So even if profits stay the same, the profit per share, the EPS, goes up. Same for free cash flow per share.
Right, which investors like to see.
Absolutely. Those are kind of the twin engines that tend to drive stock prices higher over the long term. So the fact that management is buying back stock so quickly, so aggressively, it strongly suggests they believe the shares are undervalued right now. They think it's cheap.
They're signaling confidence in the future, basically.
Precisely. They're putting company cash to work, betting on themselves at this lower valuation.
So this brings us to the big question, maybe the one on a lot of listeners' minds. Could Lululemon, given everything we've discussed, the low valuation, the growth, the buybacks, could it be one of those, millionaire maker stocks, a real long-term winner?
Well, that's the million-dollar question, isn't it? Look, you've got a lot of positive points stacking up. The low PE, that strong international growth engine, especially China, the smart capital allocation with the buybacks. It definitely looks like it could be a rewarding investment from here if.
If. There's always an if.
There always is, especially in this industry. We have to acknowledge the nature of the apparel business itself. It's notoriously finicky.
Yeah, fashion changes fast.
Exactly. Styles come and go. Consumer taste can shift on a dime, sometimes for reasons that are hard to predict. What's hot today might be, well, not so hot tomorrow.
So there's inherent risk just because it's fashion.
There's inherent volatility, absolutely. So while the numbers, the strategy, everything looks really solid today, making very long-term bets in the apparel world always carries that extra layer of uncertainty. It's just a reminder, that even the best companies operate within these broader industry cycles and trends that can change.
Right. So, okay, let's recap. We've dug into Lululemon, tried to get past the headlines, and we found a company where this stock's under pressure, no doubt about it.
Mm-hmm.
But the actual business, it seems pretty robust. That international growth, particularly China, is really impressive. They seem to be holding their own against competitors better than maybe the market thinks.
Yeah, the numbers suggest that.
And you've got management actively buying back shares, signaling they think it's undervalued.
Yeah, it really brings into focus how important it is to look at multiple pieces of data, right? Not just relying on the prevailing market mood or these powerful narratives that take hold.
Definitely.
So if Lululemon keeps putting up strong sales numbers, if they keep managing these competitive pressures and any tariff impacts effectively, and they keep smartly buying back stock at what looks like a low PE ratio, well, what does that suggest to you, the listener, about how to evaluate a company when there seems to be this lag, this gap between market perception and the business reality?